All right, what's up, everyone? This is a little different, just a little bit of different, just a little bit of different. This is weird. I'm very nervous on this because I'm going to teach you on how to trade options, basically sell them, all right? Because you want to sell options. You really do, because your probability of success is so much higher. All right, so we're going to talk about that and we're going to do it live. So that's what makes me a little nervous right now. So while no one's in here yet, let me go ahead and try to share this video out. And just give me a second if you come in. Here is the video. All right, there we go. We got the video up. Analytics, where's the share? Yeah, so give me a minute, y'all. So we're going to talk about selling options live, if you just came in here. And I got asked on the video, like, yo, man, how do you sell those options? You know, I don't have a lot of money because, you know, I'd be spending a lot of money selling those options, you know, because basically you're picking up crumbs. Basically, you're risking maybe, I'm just going to throw a number out there, say $1,000 to make $100. People are like, what? But, yo, you got like a 90% chance to make that money when you do that. So that's where the money's at. You ever buy options and you're just watching this thing just belittle, you know, just go away, disintegrate to nothing, and the stock is not moving? Well, the person that sold you that option is making all kinds of money. So that's why you just want to sell. When you buy options, you really need the stock price to go higher, okay? Basically right away, because you start losing money. All right, so what I'm doing is I'm sharing this video out. So if you can share it out, that would be awesome, man. I'll shout you out. Say I shared it. As my girlfriend says, sprinkle. Okay, you sprinkle it, and I'll give you a shout out, man. That'll be pretty cool. So I'm trying to. Where is I got Cashmatic up here in the jewelry box? You're supposed to be at work. She's supposed to be at work. I was gonna do a pre-recorded video on this, and I just totally losing my concentration. I was supposed to do a pre-recorded video on this, and I was like, you know what? I'm going live. Hell yeah, I'm going live. So what is going on? I'm sorry, y'all. That's why I hate doing this stuff. I need somebody to kind of like do my chat, my sharing and stuff when I go live. That would be awesome. I need some help. All right, so here we go. So we'll start up in a couple of minutes. So get up in here. This is even though it's live, I guess I can open up the floor later if you want to come in, but I want to definitely keep the questions and stuff related to this video. So no questions on like a DraftKings Neo. We're specifically going to talk about the SPY options today. Okay, so that's what we're going to talk about. So I want to keep all the questions. If I see a question, most likely that's not related to this video, I'll probably just skip right by it, like I never seen it. All right, so I definitely want to keep it related, and that's to give the people that watch this video later a to keep the some replay value, I like to call it. All right, copy. Let me go ahead and put it in here. All right, y'all. I'm almost done here. I'm trying to talk and do this at the same time. That's good. Let's post that up, and that's on Twitter as well. And yeah, all right. So we'll go ahead and talk. So many people I got here. I can't even see. Notice I got my glasses on top of my head because I can't see. Where's my StreamYard? Okay, here we go. All right, y'all. Okay, I think I'm ready to go. There we go. Y'all couldn't even see me. So, all right. So here we getting ready to go. This is what I look like. Got my glasses on because I can't see. All right. So I'll put this marker in the video for the replay people, and right about the, I don't know, 5-minute mark or so, and they can skip all the BS in the beginning. Looking at the market, man, it's kind of ripping. Yeah. It's like Congress is all about the stimulus. All right. I'm the one that said we can't go sideways. Let's go forward. Let's move forward. All right, so selling options for under $100. I once turned my account. It had like $100, $200 in it, and I turned it all the way up to thousands of dollars, tens of thousands of dollars. And I started with like $100. I was like, yeah, let me just put some trades on. And actually, that's when I really got into selling options heavy. I was like, man, this shit's working. I don't even have to watch it. It's like on cruise control. And I just kept, selling them options, So it started with $100. And as my account started to grow, I started going into the bigger boy stocks, and that's the Amazon, Tesla. And that's why I trade them today. There's lots of premium in those. You can get way away, from the money and sell those options. Like say Google's trading at 1,800. You could sell, I don't know, the 1,500s and get a little chunk of change. And, I don't think Google's going down there, but you got to remember when you sell these options, anything can happen. Anything. There's nothing guaranteed that says you're going to be making money. But the probabilities are higher. The probabilities of success is a lot higher. All right. So let's get into it. Let's talk about it. All right. So in here, damn, look at that spy. All right. Let me concentrate. All right. So what you want to do, let's just get right to the nitty gritty. All right. You want to use the SPY, and I think you might be able to use the Qs. You want to use options in the options chain. This is the options chain, right? We're looking at the SPY, and that's all the options, right? And this is when they expire, the date. And this in parentheses is how many days till expiration. All right. So we'll talk about that later. But in the options chain, you want to go in here and you want to see options that's only $1 wide, right? So like here, and I'm looking at the puts. We want to sell puts, especially in a bull market. We want to sell puts. You can sell calls as well, but you can get run over in a bull market. Anyway, so see, you got the 369 strike, 368, 367. Okay, so those are $1 wide. Now remember, with options, it's $1. You got to times everything by 100, right? One contract is 100 shares of stocks, so it's $1 wide. Got to times it by 100, so it's $100. All right, so basically, I want to sell somewhere around a 30-day mark. And this is just me. You could sell anywhere. The more you sell out, right, the farther you get away from expiration, say February, the more credit you can receive. Of course, if I sell an option that expires next week, the less credit I'm going to receive. But here's the reason why we want to do that. It's something called the decay curve. All right, the decay curve. And when you buy those basically options, they have two-part. They got extrinsic and intrinsic value. Don't worry about that. Don't worry about that yet. Okay, I don't want to get deep. I don't want to get deep on you. But basically, the options have this part of it that's just disintegrating away, right? And that's the time value part. It's disintegrating every day. And you could see this is what it looks like. So the longer you're out, see the 120 days, 90 days, 60 days, 30 days, 0 days. The farther you're away from today, the less those options are decaying. But as you get close, right, here's 30 days, 0 days, the value of those options are dropping like they're falling off a cliff, right? That's truly a cliff. So the meat of that cliff, we want to sell options in here, the meat of that curve. And this is what a lot of people get wrong. They want to buy options in here, right? The options are just disintegrating as fast as you buy it. And so if you want to go long something, you want to buy an option, go way out here. I know it's more expensive, but that option is not disintegrating away from you. Okay, so when you're in here, I'm going to say in this 60-day area for the most part, or really kind of, yeah, I'll go 60 days. Okay, sell those options. Those options are meant to be sold. Okay, all right, so here's the 30-day mark. This is where I like to sell them, right? Right in here, right where that cliff really starts to get steep. I'm going to look to sell right here. And then you can see you can come over here to maybe even the 20-day mark and look, really falling off a cliff. You got to be careful as you get into this zone because there's something called gamma that I'm not going to get into. And if the stock market really reverses or, that volatility basically has to do with volatility and how fast that option is going to change, increase in value and decrease in value. It's a crazy Greek to understand, but you can really get whipsawed in this area. Okay, so you have to be careful. So I like selling it 30 days out. All right, so that's why. Okay, that's why I brought up this chart. This is why we're going to sell here and we're going to just watch this option decay, and then we're going to look to buy the option back later at a lower price. Okay, so basically, let's go to the 30-day area. And we got here 31 days out, 29 days out, 27 days out. So if it's under 30, there's no 30. I like to go a little less. And so, okay, we'll come here to the 29 days out. Now you have to be bullish. All right. So basically, we're going to simulate a trade, and we are, let's see if I can do this. Yeah. Okay. We're going to simulate a trade, and basically, this is just for educational purposes. All right. You basically want to be bullish on it, right? When you sell something, you it's a bullish position. So you want to be bullish on it. You just don't want to kind of just winging it. All right. So just kind of keep that in mind. All right. So anyway, let's look at the chart. We'll look at SPY. Here it is. This is the chart. You see it's breaking out. I love that breakout. I do think we go a lot higher, by the way. All right. So right now it's trading at 369. That breakout level is right around 360. Just kind of keep that in mind. So let's go back to the options. All right. So what we want to do is we want to trade options. And this chain is not really giving us a lot of options because I want to trade the dollar wide option. See, it's 369, 368, 367, 366, 365. Now it starts to go $5 wide, 360, 355, 350. That's going to cost us more money when we do a spread. So we'll play with this and basically sell something right here. We'll sell the 366, 365, buy the 365. So I'm going to go here. I'm going to think of swim, by the way. And I'm going to go down to sell. I'm going to come over here and I'm going to say sell vertical. And it automatically sets that up for us, right? It kind of sells that 366. And wait a minute. I did say sell. Hold on a minute. It's kind of got it backwards. We're going to change this to 365. Why is it doing? Hold on, wait a minute. So vertical. There we go. I don't know what the hell I did. All right, so it's selling at 366, and it's going to buy the 365 right here. Sell 366, buy 365. And right now, the mid price, for the most part, is 34 cents, right? The mid price is the difference between the ask and the spread. Here's the ask for the 366. Here is the bid. Right in the middle of that, it's probably like 338, excuse me, 339. But then we got to kind of subtract that from this price. So it's kind of wide today. Anyway, but the mid price, when you add them both up, is 33 cents. All right. So basically, if we sell a dollar wide option, it's 33 cents. So let's go ahead and do some math. By the way, if you watching, like this video. If you have any questions, go ahead and put them in the comments. We're doing, I'm just showing you guys how to sell. Which you asked for it. I was doing a video and you're like, hey, can I sell options? I don't have a lot of money. Can I sell them for under $100? And I'm like, hell yeah. Yeah, you can. Yes, you can. So anyway, we're going to do some math now. All right. So we're selling the 366 and we're buying the 365. I want to keep this as easy as possible. That's a dollar wide. So a dollar times 100, that's going to cost us $100. But here's the good news. We're going to sell it for 33 cents, and that's $33, right? So 100 minus 33, y'all hear me using the calculator because my math sucks. $67. That's our risk. That's our margin. To do this trade, if it pops off and I can get 33 cents for it, it's only going to cost me $67. That means all you need is $67 to do this trade. Now, I do have some bad news. To even do this kind of trading, you need a margin account. And I don't know too much about this. You probably need $2,000 in it. Okay, so you do need an account with some money. If you do it in a like a retirement account, you should be able to do it if you get the permissions, but it's got to be cash covered. You got to have the cash in your account and all that stuff. So I don't know too much about that stuff, but as long as your broker allows you to do this, man, it costs you $67. So for this trade, we're going to lock it in, right? See, it's changed. I'm going to hit this lock button. Let's try to get 33 cents for it. All right. So what is that? So our risk is only $67. Right? So I'm going to do 33 divided by 67 on this. And that's basically 49%. So I'm taking that $67 and I'm going to make 49% on my money. 49%. And this is 30 days. Do you know how much money you can make if you can make 49% on your money every 30 days? You know how rich you'll be, right? But nobody wants to do this because this is boring. It's only 60. It's not going to make me hundreds and thousands like buying Tesla when it goes up 40 points a day. This is the slow way to make money, and you'll blow those Tesla traders out if you're consistent with this. Now, we're talking about $67. Let's say you have more than $67. Man, I want to do it. I'm a big time trader. I want to put $1,000 on this. Well, you don't have to do one. You can do this. Let's do it 10 times. That'll basically cost you $670. Let's do it 12 times, $1,340. I'm sorry, 20 times, $1,340. You know what I'm saying? So that's basically what we want to do. So if you did that 20 times, $33 times 20, you're basically going to try to get $660 out of this, out of your $1,304. Did I get that right? 67 times 20, $1,340. Right? It's a good trade. So you could do it with $67. You could do it as much as you want. You're just going to have to do more option contracts. All right. So the bad thing about getting in here and we doing 20, the commission price starts going up. So a lot of people have to pay 67 cents. I do 60 cents a contract. So that's 20, that's 40 legs, right? So this, I'm kind of getting away from the video because you don't really want to worry about commissions too much. We're going to make more money. It costs to play. You know what I mean? Don't worry about that. You're going to make that money back. But gosh, 40 options times 0.60 it'll be $24 in and $24 out. Right. But that trade, you was trying to get $660. So see, it's nothing, man. It's nothing. You know, so that's that. So let's get back down to the one, right? We want to go ahead and use our $67 and we're going to try to make 33 cents. Okay, which is $33. 49% profit. That's huge, right? As Trump will say, huge, huge, huge. All right. So anyway, if I were to sell this 366, you can come over here and you can see that delta, right, is 43.43. Now, I'm close to the money. The money, by the way, is where the option is trading, where the stock is trading. It's 369 right here. So see where it turns purple, black, that line, both sides. That's, you know, if it's purple, it's in the money, right? If it's black, it's out of the money. For the most part, we want to sell those out of the money options because they have all that extrinsic value. It's all time value, right? It's all time value, and that's what we want to sell. All right, so we're going to sell this one only. This is demonstration purposes only, and only because it has that $1 wide, right? And we could do it for 33 cents. And our probability, what is that about? It's going to be about 57% chance to be right. Now, generally, I would sell something down here. You know, I'll get it to close like 20%, basically where I'll collect 20 cents. But we're going to do this one's a more riskier trade, but we still have a better chance of making money because we're selling. We're on the sell side, not the buy side. And it's telling us right there with the delta. The delta is one way to kind of compute your probability of success in making money, right? So it's not the actual, but it's close enough. So a lot of people use the delta. All right. So the delta is 0.43. So basically, if you take 100 and you minus 0.43 or 43, right? 143. I'm just showing you the math. 57. It's 57. So you have 57% chance to make money. Now, making money means $1. Basically, there's a 57% chance that this option expires worthless. All right. So, and that's what we're going to do. All right. So I'm going to go ahead and put this trade in. This is my live trading account. I'm going to go ahead and do it. But I don't know if it's going to stick. All right. I'm just going to press the enter button. We're going to do it for 33 cents. And let's see what happens. Okay, while it's not happening yet because they know I'm going to take their money. By the way, when you put in a trade, and the option price, if it feels like quick, man, you're going to lose money. That's one sign that makes me know I'm on the wrong side of the trade. If you put a trade in and it's taking a little bit to get filled, oh, you're going to make money. Yeah, the market makers know you're going to make some money on that one. So it's trying to fill. It's trying to fill right now. And while it's trying to do that, let's go ahead and analyze that trade. Can we analyze it? Put the SPY. Is this it right here? Let me go back to the trade window. Let me see. I'm gonna put it back in here. Put the 33 cents in there. There it is. Let's analyze that trade. All right. So basically, we're looking at the this is the analyze tab on Thinkorswim, right? So we already did the numbers. I don't have to even look at this. All right. So we know we're gonna make 60. We know we're gonna make I'm $67. I should say no. We know we're gonna make $33, and our risk is $67. If you can see over here, write these numbers to the left, all the way to the left of your screen. That is the left. It says on January 7th, 21. It's in what is that, turquoise, blue, whatever. It says $67. That's the most we can lose, right? And our break even is right around here, 366. Well, to be exact, let's be exact. We sold the 366, and we got a 30. What did we get? A 33 cent credit. So 366 minus 33 cents. Why is it saying that? Should be right about here. Should be right about here. Hold on a minute. I am doing that math right. We kind of get this nice and wide. Move that over. Yeah, there it is. 365.67. That's our break even. Okay. So we basically took the strike we sold, and then we minused it from the credit. And then it's going to be our break even. All right. So it could actually go to 366 and we still make money. Well, of course we make money. That actually inspired worthless. It could go to 365.80. Okay. And we'll still make money. All right. So that's basically it. See, the most you can lose, look at the purple number on 1/7 is $67, and the most we can gain is $33. So when that happens, let's say we let this expire worthless, right? We bring it down worthless, 29 days away. We do it again. We do it again for another 30 days, and we just keep doing this kind of trade. So our $67, our $67 plus we done got that 33 cents will now be $100, even though we had $100 in our account. Don't worry about that. Okay, so we could do it again next week. $67. Basically, imagine if you make $33 every 30 days, which is 12 times in a year, you'll make $396. You're basically taking that $100 and you're going to flip it into $396 in 12 months. That's if everything goes okay. That's if all these trades are successful. All right. Now, the odds of that, we saw the odds, 50% sets that 57, a little bit more than a coin toss. But where the real money is, and it's actually the least amount of money, where you increase your chance of success, is to sell a little bit further out. I can't really demonstrate it here because these are not a dollar wide, but sometimes you have that. You just got to look for those options. I remember these used to be a dollar wide all the time. Say like here. See, this is giving us a 70% chance of probability. We can come over here with 22 days out, right? Sell that 361, buy that 360 for 21 cents, right? Without doing the math, that should be 80. Gosh, 80. Sorry, a 79% chance of success just by looking at that. And yeah, right there. 30% chance it's going to expire. Sorry, 70% chance it's going to expire. This is weird. I don't know if the credit's getting looking at the credit. Anyway, remember this is live. Okay, so cut me some slack. Anyway, so the delta is basically saying it's 30. So basically that's giving us a 70-cent chance of probability of success, right? But when you look at the credit, sometimes you could just do it with the credit, right? $1, it's $1 wide, I'm getting 20 cents. I got, 80% chance of being right. That you could, so basically this should be somewhere kind of around there, messing with the 30 wide, but it's got the volatile. Never mind. I ain't going to get into all of that. I don't want to make it deep. Rags to Riches, what's up? Credit spreads are the best way to trade. Yeah, I just did it. You did it for 34 cents. I don't know if I got filled. I didn't hear my thing go. Hey, Rags to Riches. This was for demonstration purposes only, man. But hey, it's only 67 cents. That's all it's costing you, $67 if you're on. You can just forget about this trade and you're out $67, man. You shouldn't be trading if you don't have $67. Anyway, so I hate to say it like that, but that's the real deal. I mean, that's the real deal because you lose money in trading. Trading is not just win like we see in a lot of these other YouTubers kind of putting it out there as you're just winning all the time. No, you lose a lot. You just have to win more than you lose. If you could do that, you'd be successful. And this is one way because the trade itself is telling us that we will be if we did it every single time, it's telling us that we will be successful more times than not, right? So you have to be careful. One key thing, you really can't let these expire. All right, so we'll talk about when should I take these off. You really don't want to, with the odds, see it's going to make it they say what, zero-sum game? Okay, because the times that you are wrong, it's going to take all the money back from the times that you were right. So when we lose these trades, we don't want to necessarily lose all that 33 cents. Right? We want to buy it back. We want to decrease our chances of, let me see. We want to decrease our chances. We want to increase. All right. So we know our probability of success. We want to even increase that even further, right? By getting out of these trades before they go, getting out of them early for the most part. So basically, a good goal is to get out, right? We sold it for 33 cents, is to buy it back at 15 cents, right? I just kind of cut it in half, right? So when it gets down to that, because let's say it's trading at 15 cents and then all shit goes wrong, then the market goes the other way. Now we wind up losing the $67 when we was up $15. So I'm not getting into all the deepness and showing you the charts and all of these probability numbers and all that stuff. But it does increase your chances of being right when you get out earlier. Okay, so here's that trade. Here it is right now, and I'm going to reverse it. I'm going to buy it back. Okay, and I'm going to set it I'm going to set limit. I'm going to set good to cancel right here. Go ahead and zoom that in a little bit, and I'm going to buy it back at put 15 cents. Right, it's a little bit less than half. And make sure I got the right trade on. No, this ain't the right trade. That's 22 days out. See, I almost messed that up. Matter of fact, how am I gonna buy it back? I ain't even how did you get it for 34 cents? I can't even get 33 cents. This is what? Anyway, this is my monitor working. Yeah, I can't even get it for 33 cents and you got it for 34 cents. Now I don't even want to push it away. That's it, man. Hey, if I don't get filled, I ain't get. Did you really get it for 34 cents? Anyway, all right, I'll simulate this. I'm going to simulate it. Let's say I got filled for 33 cents. Let's buy it back, right? You would just kind of bring it down here to 15 cents, right? Good to cancel. And basically, when that thing disintegrates all the way down to 15 cents, they'll buy it back on us. And most likely, we don't have to wait this whole 29 days. I bet you if the market just kind of does what it does, it goes sideways, we could be out of this trade in 10 days. 10 to 15 days tops. And then guess what? even though we only got half the credit. Let me see. That means we would have had made 15, 16, 17, 18 cents divided by that 67. That means we would have made 26% on my money. Oh, wow, that's still great. 26%. It's not 49%, it's 26%. Anyway, that's still great. But if we could do that in 10, 15 days, now we could put the trade on again and get more time, right? So we could go ahead and buy it back with 20 days left to expiration, and then go ahead and sell another one 30 days out. And just keep doing that process. Keep doing it. Wash, rinse, and repeat over, and over again. And I guarantee these are boring trades. They boring. This is why nobody wants to do it. This is why there's only 2 people up in here because it's boring. I'm not sitting here talking about NEO and I'm going to buy 10 call options and watch next week I'm up $10,000. No, I'm talking about slowly growing your account. And I'm telling you, if you could do this and in 10 years, watch how much money you have. I know that's a long shoot. All right. Even 5 years, watch how much money you have. I bet you with a lot of success, you'll be in the hundreds of thousands of dollars. I know it. Yeah, I know it for a fact. You're like, hey, Dre, how do you know it for a fact? Think about it. Think about it. All right. You said you're going to post it on your Twitter. All right, cool. Cool deal. I like to trade a lot. I hope you win now that you kind of took the trade. I said for educational purposes only. But I actually, to be honest, I actually like the trade. I think we're going higher into the end of the year. So I actually like it. Hey, I see your trade, by the way, because this was 0 and now it says 1 on the volume. So there it is. Yeah, I can't believe you got filled. Hey, what broker do you use? What broker do you use? Rags to Riches. Let's see that. Cancel, replace. I got best exchange. See if I put on CBOE. No. Cancel, replace. Go back to best. Interesting. I can't get filled at 33 cents. You got filled at 33. Anyway, I'm telling you, man, I'm not giving them that penny. I ain't going down to 32 cents. Oh, man. So I hope y'all understood. I mean, for the most part, this is a live video and I'm nervous as F. I don't know if I hit all the points. I tried to make it as quick as possible. I wanted to show you. I forgot who asked. I think it was Cashmatic last week that said, how do you do this for under $1? Under $100? That's how. All right. So you use Robin. Which one did you get filled with on that one? Was it Robinhood or TD Ameritrade? Well, I'm using TD Ameritrade for the most part. Thinkorswim. So that's it. Just find chains that, and for the most part, it's the SPY. I think Apple does dollar wide. Let me see. Let me go 38 days out. Yeah, look at Apple's 50 cents watt. No, that's 250, 252. By the way, there are some that do 50 cents. Only thing is the commissions will kind of eat you up when you're doing it like that. Yeah, Apple's doing I could have sworn at one point Apple was 50 cents wide, I think. Let's see IWM. IWM is $1. It's $1 wide all the way. Yeah, perfect. So something like this, right? You can come out to this 20 delta, and then, oh man, it's got great liquidity as well. Of course, it does. IWM, right? So that 174, 173, you get 16 cents. Personally, I don't like the credit on that one. I should be getting somewhere around 20 cents. Yeah, I kind of don't like the credit. I might have to come up and say if I sell this 22 delta. I like to do this when they're $1 wide. I at least like to get 20 cents. I don't have to. but that's kind of like where I like to be. And then that's another lesson on its own. That's where you're talking about implied volatility. See, there's other factors to this. I made it real simple. There's something called implied volatility where you kind of want to sell it when the implied volatility is kind of high. All right, you'll get better. Actually increases your chance of success, right? And with the IV rank, right, depending on where it's trading, IV is now compared to it was where it typically trades. All right, so I'm not getting into that part. All right, and it kind of will increase your chance of success, and you'll get more credit, and you'll be able to stay far away. So because typically how it works is implied volatility is generally overstated. Right. So basically the volatility, this is the market maker saying, man, this stock in 30 days, this thing is probably going to move $10. And then you can look at this IWM. Let's go to the 31 strike, this first yellow one right here. And if you come all the way over here, they basically saying there it is, the 12 points. It's basically they saying the move is going to be about $12, right? With this 28% implied volatility. All right, so generally it's overstated, especially when the implied volatility goes up. It doesn't move that much. So that's why you want to sell them and sell them even beyond that number. And this is on, like I said, this is part 3. This is definitely not options 101, but I'm trying to keep it options 101. All right, so and I don't have the greatest way of explaining this stuff. I'm not perfect. But I definitely have the understanding of what's going on. Oh man, what's up, Cashmatic? I think I did this video for you because I think you was the one that asked me about selling options for $1. So I got ahead and showed you how to sell it for under $100. We just sold an option. Rags to Riches got filled on it. I didn't. He sold a SPY credit spread for 34 cents, and I can't even get filled for 33 cents, and he did it on Robinhood, and I can't get filled. That sucks. Anyway, so but anyway, I'm just gonna keep it at 33 cents. I'll keep it there all day. If I get filled, I get filled. If I don't, I don't. I do like to trade. We have a good probability of success. It's closer to the money, so it can be it's a little bit more riskier than I like to do. But if we really feel bullish, it's okay to like kind of get a little bit more riskier, get closer to the money. You get more credit when we feel a little bit more bullish about our trade or what we're trading, right? So if you come over here, and I'll give you an example. Let's look at a stock like NIO. That definitely came off that bottom we talked about earlier. This you might not feel as comfortable because it's kind of coming down, right? So therefore, you might want to get further out of money as you possibly can, so you gives room for it to come down before it turns around. Or you might be real bold. I mean, there's a lot of ways to do this. You might be real bold and say, I'm going to sell right here at that support, or maybe it's going to go up from here and you sell, right in this area right here. Even you get a lot of credit, and if this thing goes up, you're going to be right and start making money immediately. You could basically get out for a nice credit in a few days. So the closer you are to selling that credit spread to where the stock is trading, the closer you are, the higher risk the trade is going to be, even though you're getting more credit, right? So the more credit you receive, that's the way to look at it, is the higher risk. Not necessarily the credit you receive, I should say the percentage, right? If you collect 50% of the width of the strikes, that's going to be a higher chance that you can lose. If you collect 20% of the width of the strikes, so $1 wide, 20%, $20, that's a good chance. I know you're risking $80 to make 20. Remember, you're really risking 100, but you're getting $20, so therefore you're only risking $80 and only to get 20. Hey, it's reason why it's like that, because they know you're going to be right. You're going to be right. If I bet, next year, if I bet, I bet you $100 that the Lakers win the NBA championship. No, you're not going to give me. All right. Yeah. All right. You want to bet? All right. So here's $10 on that because they know you're going to be right. Right. But if I say, hey, I don't know a sucky team. I'm not good. I'm not here. Here it goes. Hey, I bet you $100 the Knicks are gonna win a championship. To win the championship, you know, you get $100 for. You might get $90 for that because they know they Knicks ain't winning. Right? I bet. Yeah. Did I say that right? I don't even know. Yeah, yeah. If I bet $100 that the Knicks win, I can't. You get my point. I'm kind of messing it up. I hope you get my point. Basically, when they know you're right, you're not going to get that much credit for it because you're right. You're going to win. You're going to win. It's like horse racing. You bet on the favorite, man. You got to bet like $10 to win $1. If you bet on the what is that? The oddball, the guy that's what is that? The long shot. You bet on the long shot, $1 can win you $10,000 because they know it's going to lose. You know what I mean? So it kind of goes like that. Hope I hope I was able to make a point talking about that. Anyway, I'm gonna go ahead and make this video short because, like I said, I want to give replay value to the people that watch it. And I was thinking about making a pre-recorded video, you know, and get everything right and get all that editing done and kind of making, you know, sometimes I edit my voice to make sure I said the right thing. Here I'm stumbling. I'm just kind of going off the top of the dome. I got no notes. All right. And it just is what it is. Sometimes things come out a little twisted, but pre-recorded, I try to be a little bit more perfect and, you know, getting my shit together and all that stuff. But I didn't have time to do all that stuff. So I'm just like, hey, let's go live. Let's talk about it. Hopefully enough people come in here and they can even ask me questions. Rags to Riches took the trade. Definitely keep me updated because I can't keep you updated if I'm not in the trade. You know what I mean? It's still working. 33. It says the mark is at 30. I should be getting filled on this. The mark is almost 34. I'm trying to sell it for 33. I'm disappointed. I'm disappointed in Thinkorswim here. I'm definitely gonna check out your Twitter to see if you sold that for 34 cents. All right, y'all. So thanks for watching. I'm gonna go ahead and end this video. I'll probably actually, after I end this, go ahead and work on a pre-recorded video about, I don't know, something, something that's popping. Yeah, but I wanted to put this video out there so you can watch it. And so if you like what you've seen, you know, hey, like the video and subscribe, of course, hit the bell. And you never know when I'm going to go live. I was going live every Fridays. That didn't last long. Now I just go live whenever for the most part, when I get lazy. When I get lazy and I just want to kind of press record and press stop and just be done. Cashmatic, I appreciate you coming up in here. Don't forget to press the replay so you can see what we was talking about. And Rags to Riches here all the time. Thanks for checking me out. I hope the trade is successful. All right. And let me know how you manage that one. We just talked about getting out for a credit, but I didn't talk about getting out for a loss. That one I'll probably save for another video. I don't think it's as, see, my scale on that, I don't have a strict guideline, like double the profits. Okay, we sold it for 33 cents. And if this thing goes up to 66 cents, we're out, we're buying it back. I don't really trade them like that. I gotta make it firm like that. And generally that is I'm gonna look at it when it reaches 66. I'm gonna be like, you know, I'm gonna kind of look at the charts, see how it's trading. And if I really feel it's going down, if I feel we're at support, I'll hold on to it. If I feel we're not at support and we're gonna continue to go down, I'll get rid of it. So it all depends on where we're at. And that's why it's not firm, but for the most part, a guideline, no more than 2 times the credit received. But see, this one, we can't really do 2 times because that's over $1, right? So times, yeah, 2 times, you know, yeah, 2 times I guess would be 0.66 cents, right? I guess that's like 1 times. Anyway, 66 cents. You might want to get out of the trade and just go ahead and chalk up the L and make it 33 cents. But I think that needs to be another video to make it more detailed on how I trade, right? So the channel is called Dre Trades. This is how I trade. And occasionally I might buy calls. Like I'm in the calls in Facebook and Google. If I feel something is bullish for a long term, I might buy a call spread. All right. But if I just want to kind of, I don't know. It just depends. And maybe that's even a video on its own. What kind of trade I'll put on depending on what the stock is doing. All right. So it's a bunch of ways. And there's a lot of ways to make money in options. And that's what makes it so fun. That's what makes option trading fun, is you just have, you could do diagonals, right? You could do call spreads. You could sell put spreads. I don't like selling call spreads in bull markets. I learned the hard way. But sell put spreads. You could buy puts, which, buy calls. But the guaranteed trade to be more successful most of the time is sell them. And that's what we talked about today. All right, so thanks for watching, everyone. I'm going to go ahead and end this video. Hopefully you guys hit the bell, subscribe, and do all that stuff, and you like the video. Let me know how you trade options. Let me know in the comments below, if you like that trade that we simulated, if you think Rags to Riches is going to make any money on the trade, or how you trade, and all that. Remember, when I'm on YouTube, maybe this isn't, when I'm on YouTube, there's a lot of newbies out there that's really buying the calls, and they making all the money. But generally, the market finds a way to take it back. Let's put it that way, right? So you have to be cautious of the call buyers. That's all they talk about is buying calls. The market finds a way to take that money back. And I think anyone that's been trading options a long time could verify that and probably have their own stories to tell as well. All right, so thanks for watching, y'all. This is Dre Trades, and I'm out. Thanks, Cashmatic and Rags to Riches. Appreciate y'all checking me out. I'll see y'all.